Good afternoon. Today is 15th of October. I am Narendra, your host. Welcome to the Growth Investing channel. It's been long since we have created any video and any update on the market and the portfolios. Now, I believe today is a good day because we have got some good news about the global markets, global risk, as well as the earning season is going on. So let's quickly discuss about these 4 or 5 points and let the video length be less than 10 minutes only. Okay, in terms of global risk, we all know that Israel and Iran were in loggerheads and they were attacking each other and retaliating to each other's provocation. This had led to a significant rise in the global risk, the geopolitical risk, and we could see that same happening in the crude. So, to give you a preview quickly about what has happened, Israel had attacked around a month back when Iran's new president, elected president, there was a ceremony of his oath taking. There, then Israel assassinated one of the political figures of Hamas. His name was Ismail Hania, and he went to Tehran to participate in the president oath taking ceremony. So this was one point of discontent, and back to back, Israel also assassinated Hassan Nasrallah, who was the chief of Hezbollah in Lebanon territory. Because of these two, the public outcry was huge in Iran, and finally Iran has to take a call, and they retaliated on 2nd of October, which led to a crash across the global markets, and Indian markets also fell down or came down to an extent of 1500-1600 points, touching a low of 24,750 somewhere. Now, you all know that what was the prelude. What has happened during this time is US and the Western powers tried to calm down Israel, as well as Russia played a critical role in cooling down Iran, wherein we have seen a recent unscheduled meeting between the president of Iran and president of Russia, Mr. Putin. So, if experts are to be believed and the diplomats are to be believed, this was a clear message from Russia to Iran that you should not participate in unprovoked or even lesser provoked situations wherein you might be at risk or your civilians infrastructure might be at risk because of this. Because Israel vowed to retaliate hard on Iran, and it has clearly said that it won't spare anyone, whether it is their national assets, oil assets, ports, or any other critical infrastructure of the country of Iran. So now we see both Iran and Israel cooling down a little bit, and these little skirmishes will continue to go because they are at war, and it's a fight of ideology rather than a fight of territory. So we see this war to continue gradually, but as and when we move, it will also become insignificant, as Russia and Ukraine war has become insignificant to the markets now. Now, based on this, the good news is that Israel has given assurance that it won't be attacking the oil assets of Iran, whether it's a oil delivery port, oil fields, or oil refining capabilities. So that's what is a good news for the global markets as well as for the Indian market. And now India market, once it has now dropped down by 1500-1600 points or 1500 points, uh, this Middle East provocation was just excuse. Market was fair, overly valued, overly overvalued, overly. It's we call it overvalued. So it took its own sweet excuse to correct itself. Now we are hovering around 25,000 and consolidating in this range since say October, what I call 8th or 9th, and that's a good sign for us because if we consolidate in this range, then we might again take back our upward trajectory, and that should remain. The macro story remains solid, strong, and it should be back on its growth path again. Important is we are now seeing earnings season. All the biggies are now announcing the results, and if again the fund management community or the analysts are to be believed, this quarter result remains muted both in terms of the earning as well as because because we had seen extended monsoon this year, which is again good for the rural economy. We see Kharif crops, if I am right, Kharif crops doing sowed and doing well, and because that becomes a major earning for the farmer community, or the because our major population is engaged in agricultural activities. Good part, good monsoon, but because of this Q2, when it immediately was post the election season, and first 6 months government was engaged in elections starting Feb onwards till June result, and then government formation in July, and so that's why it is expected that the focus was less around to the economic activities and more towards the election. So it is expected to good monsoon, prolonged monsoons, extended monsoon. Again, the manufacturing activity fell down, and certain other activities also fell down, which is fairly normal, nothing to worry about it. So, but what should worry, or what should, I think the market has already discounted it uh, with a single digit growth, at least in Nifty 50 company. We might not be able to see a double digit growth. If there is a surprise, welcomed. Else, it would be a muted kind of a quarter. And third, in terms of how I see the markets doing now, markets I believe would be consolidating around a level of 25,000, or you can say a broad range of 24,800 to a range of 25,200, 300. And a technical bounce back is expected up to 25,500, which is again a good sign. And again, the market should be consolidating in this range for next 10 15 days. This is what I see till the time all the results are there and next quarter guidance comes in. So this is what is important out here. And quickly, let's discuss on the themes which are there up and there. So themes which are up and there. Last 18 24 months, we have seen PSCs, defense, infra, railways as a major run-up theme. And once those themes were now out of fashion, we could see multiple sectors trying to take out their hands. It started with IT, followed by FMCG, followed by pharma, and then now it is the asset management companies or the financial fund management companies. You can say these all companies are now back to back. They had been trying to do it. So what I see is a major change. What has happened is pharma was consolidating for long since post-COVID, so it has seen a little uptrend. But those things which should continue to go hold or go strong is one is healthcare, second is your these financial companies, not the lending one, not the banking one, NBFCs and these asset management companies. I see a good strong pickup there. This is one. In terms of capital goods, yes, multinational capital goods companies are seeing a uptick because I think they are expecting a good order flow in capital goods because of their superior quality products and their what you call presence in the global markets and expertise on those products, be it the engines or locomotives you call it or something like that. Now, I think because of the extended monsoon, infrastructure, cement, these won't be able to do good. FMCG, as it started, is now again, I would say, is not coming or bringing it to such an extent because the demand has not picked up. So we'll continue to discuss all this in future. Thank you for being here. Thank you for tuning in. And if you like, please do subscribe, share with your friends and families. Now I think I should post regular updates on it. Thank you once again. Bye bye.